Are you interested in learning how to reduce your tax burden as a small business owner? Welcome to the world of tax planning for small businesses. It's a realm that might seem complex, but with the right knowledge, it can become a powerful tool in your financial arsenal. Tax planning, in essence, is the art of arranging your affairs in ways that postpone or avoid taxes. It's about understanding the tax implications of your actions, so you can make the best business decisions. For small businesses, effective tax planning can mean the difference between a profitable year and a tough one. It's not about evading taxes, it's about using legal strategies to your advantage, minimizing your tax burden, and maximizing your profits. These strategies range from claiming all available deductions and credits, to hiring a tax professional who can guide you through the process. Sound interesting? Stick around as we delve into the nitty-gritty of these tax planning strategies. First things first, understanding your tax obligations is a crucial step. Taxes, while not the most exciting topic, are an inevitable part of running any business. As a small business owner, you may be liable for several types of taxes. Let's break them down. Income tax is the first one that probably comes to mind. This is a tax on the net income of your business. It's important to remember that if your business is a sole proprietorship, partnership, or an LLC, the business itself is not taxed. Instead, the income passes through to the owners, who then report it on their personal income tax returns. Then there's sales tax, which is a tax on the sale of goods and services. If your business sells products or certain services, you may need to collect sales tax from your customers and remit it to the state. The rate of sales tax varies by state, so it's crucial to understand your state's specific requirements. Another important tax is the payroll tax. If you have employees, you are responsible for withholding payroll taxes from their wages and paying them to the government. These taxes fund programs like Social Security and Medicare. By understanding these tax obligations, you can start to see where opportunities may lie to reduce your tax burden. For instance, understanding income tax can help you strategize around deductions, which lower your taxable income. Understanding sales tax can help you make decisions about where to do business. And understanding payroll tax can help you make informed decisions about hiring. Remember, each type of tax has its own set of rules and regulations. Navigating these can be complex, but don't worry. In the next scenes, we'll explore strategies for handling deductions, taking advantage of tax credits, and potentially hiring a tax professional to guide you through the process. With a clear understanding of your tax obligations, you're one step closer to reducing your tax burden. So let's continue this journey together and move on to how we can use these obligations to our advantage in our tax planning strategy. Now let's talk about tax deductions, a powerful tool in your tax planning arsenal. Tax deductions, in their simplest form, reduce the amount of income that's considered taxable. Think of them as legal discounts on your taxable income. The more deductions you claim, the less income tax you'll owe. Sounds great, right? But how exactly does it work? Let's break it down. Say your business earns $100,000 in a year, but you've spent $10,000 on office supplies, another $10,000 on business travel, and let's not forget the $5,000 for your home office expenses. Add those up, and you have $25,000 in deductions. Subtract this from your total income and voila! Your taxable income is now reduced to $75,000. That's a significant saving. Now you might be thinking, that's awesome, but what kinds of expenses can I deduct? Well, there's a wide range of business expenses you can deduct. And we're not just talking about office supplies, business travel, and home office expenses. We're talking about salaries and wages, rent for business property, utilities, and even depreciation of business assets. The list goes on. But before you start deducting left and right, remember, the Internal Revenue Service, or IRS, has specific guidelines on what constitutes a legitimate business expense. Generally, it has to be both ordinary and necessary. Ordinary means it's common in your trade or business, while necessary implies it's helpful and appropriate for your business. So be sure to do your homework, or better yet, consult a tax professional to ensure you're on the right track. Also keep in mind that tax laws change frequently. What's deductible today might not be tomorrow, so it's crucial to stay updated and be flexible with your tax planning strategies. Remember, every dollar you deduct is a dollar saved from your taxable income. So don't overlook this powerful tool in your tax planning arsenal. It could mean the difference between a hefty tax bill and substantial savings. Besides deductions, tax credits are another way to reduce your tax burden. Now let's delve into what tax credits are and how they differ from deductions. Tax credits, unlike deductions, are a dollar-for-dollar reduction in your actual tax bill. Think of them as coupons offered by the government, which you can use to directly lower your taxes. On the other hand, deductions only reduce the amount of income that is subject to tax. So, in essence, a tax credit is typically more valuable than a similar deduction. So, what are some common tax credits that small businesses can take advantage of? Let's explore a few. First, there's the Small Business Healthcare Tax Credit. If you're a small business owner who pays at least half the cost of health coverage for your employees, you may be eligible for this credit. The maximum credit is 50% of premiums paid for small business employers and 35% for small tax-exempt employers. Next, we have the Work Opportunity Tax Credit, which encourages businesses to hire individuals from certain targeted groups who have faced significant barriers to employment. If your business hires a qualifying employee, you could receive a credit up to $9,000. And then, there's the Research and Development Tax Credit. If your business is engaged in qualifying research activities, you could be eligible for a credit of up to 20% of your research expenses. Don't forget about the Disabled Access Credit. If your business incurs expenses for making it accessible to disabled individuals, you could be eligible for a credit of 50% of the eligible access expenditures. And these are just a few examples. There are many other tax credits that may be available to your business depending on your specific circumstances. So remember, tax credits can significantly lower your tax bill, so don't overlook them in your tax planning strategy. It's like leaving money on the table if you don't take advantage of these opportunities. Sometimes the best way to save on taxes is to hire a professional. When it comes to dealing with the intricate world of taxes, the expertise of a tax professional or an accountant can indeed be a game changer for small businesses. Let's think about it. Tax laws are complex and ever-changing. They can be hard to keep up with, especially when you're juggling the many other responsibilities that come with running a business. A tax professional, on the other hand, lives and breathes these laws. They're up to date with the latest changes and know exactly how to navigate the labyrinth of regulations to ensure your business remains compliant. But the benefits of hiring a tax professional don't stop at compliance. These experts can be instrumental in identifying additional deductions and credits that you might not even be aware of. Remember, every dollar saved in taxes is a dollar added to your bottom line. A tax professional can help you maximize these savings. Now, some might argue that the cost of hiring a tax professional is a deterrent, but consider this. A small error on your tax forms can lead to penalties or even an audit, both of which can be significantly more expensive than the cost of a tax professional. Not to mention the peace of mind that comes with knowing your taxes are in the hands of a seasoned expert. Moreover, the time you save by not having to navigate the tax landscape yourself can be invested back into your business. You can focus on what you do best, growing your business, while your tax professional takes care of ensuring you're benefiting from all possible deductions and credits. It's also worth noting that the cost of hiring a tax professional can often be deducted as a business expense, further reducing your tax burden. So, while hiring a tax professional might seem like an additional expense at first, it's really an investment into your business's financial health and long-term success. Investing in a tax professional could save you a lot more in the long run. So there you have it, some strategies you can implement to reduce your tax burden as a small business owner. We've journeyed together through understanding your tax obligations, a fundamental step to ensure you're not overpaying or underpaying your taxes. Next, we delved into the world of deductions, exploring how they can significantly reduce your taxable income. Remember, every eligible expense counts, from office supplies to business trips. Then, we discovered the power of tax credits, an often overlooked yet crucial tool to save on your taxes. Unlike deductions, these directly reduce the amount of tax you owe. Lastly, we discussed the value of hiring a tax professional. While it may seem like an additional expense, the insights and guidance they provide can lead to substantial savings in the long run. Don't forget to subscribe to our channel for more wealth-building videos. Remember, a penny saved is a penny earned.